Hey everybody, today is Friday the 24th of March 2023. This is Brian Shannon from Alphatrends.net. The market was pretty choppy this week, but as you can see, for the most part, it was higher outside of the biotechs, which continue to be close to the worst group this year. And bonds were down ever so slightly, whereas oil did bounce back a little bit. So let's look at the charts here. This is the daily chart on the left of the S&P 500, and on the right is a 15-minute time frame for about the last 2 weeks. On this daily chart, we still have a giant mess. And basically, what we saw, the main theme this week, I think, is that we came up to the year to date anchored VWAP. That's that blue line right here, and the anchored volume weighted average price from the 2023 high. And we found sellers in that area. Now, when we look at the shorter term time frame, we see that that area was found right as the Federal Reserve made their announcement. So this pink line is the anchored volume weighted average price from that event. Now, it hasn't really offered much value, truthfully. Now, a lot of times it does, but sometimes the anchored volume weighted average price, you look at it and say, hey, it's just crossing back and forth above and below there. It's not offering any structure. And that means, it's not giving you any reason to get involved or not be involved based on that indicator at that time, just like any indicator. We do see the 5-day moving average is rising, and again, I can't really make a lot of sense of this chart here on this time frame. What I see though is when we look at it, basically, let's clear all this up, and we see a pattern that we had of these higher highs and the higher lows that was replaced with a lower high and then a lower low, and now this is looking like another lower high in the short term. On the daily time frame, we have this high, we have a lower high, and we have this lower high this week. It doesn't mean we're going to make another lower low, but we certainly have to be on alert and think that if this week's low is broken, that it could lead to a more serious decline that could go down and test the low of this month. Now, the anchored volume weighted average price from that low is right here on the 15-minute time frame. So you've got to look at the daily chart and kind of realize, you're looking at that same information magnified over here on the right. So what we're looking at is basically starting right here on this day, and it's this area that we're looking at on the right. So that's multiple time frame analysis. And right now, again, this just tells me maintain a strong defensive posture. We've got a very choppy action on the daily time frame, and so far, as I've been saying all year, I think the theme for this year is if they didn't scare you out in 2022 during this large decline, they're likely going to wear you out. And maybe it looks something like this, where it comes down and even might make a new low again and then flattens out, and perhaps then it can be in a position for an uptrend. It's not right now. The average stock, rallies up and then gets beaten back down. We saw that with a lot of these stocks recently. One that I was watching carefully was DT. I thought this had a great looking weekly chart. It broke beyond the anchored VWAP from the all-time high. It was above the anchored volume weighted average price from the IPO. And then I was watching it in here, but then the stock failed. So as it was stuck below that anchored VWAP from the earnings, I never bought it in here. I was looking to buy it. I wanted to see it do something like this and continue higher. Instead, it failed. So we look at these things, and we have to look at all these stocks and all these charts right now and look at them with an eye of suspicion, because unfortunately, I've seen a lot more stocks doing this than I've seen stocks that just continue to move higher in this market. And again, that's just the average stock. Now, when we look at the NASDAQ, we see a much healthier picture. The NASDAQ has a great percentage move for this year. We're above the anchored volume weighted average price from COVID. We've had a little bit of trouble in there recently, and we tried to break out. And as I always point out, when you look at the breakout points to a new high, you have to ask yourself, where did they come from? Well, this market rallied from 285 to 315 basically. That was a 30-point move or just about 10%, you can't trust a breakout. You can't buy a breakout if it's just moved 10% in the last week and a half. It's rare that a market will get above that and continue to go. You have to just ask yourself, where does it have the potential to go before it's likely it might encounter some supply? And this is the anchored volume weighted average price from the all-time high. So we're just below that. That means the odds of buying on the long side this week were low. Doesn't mean that you might not have made money, because this is where we started the week in the Nasdaq. That means that the average participant, we can do that. Here's the average participant for the week. They did make money, but it was choppy, and the issue is that we have the potential for resistance up in this area. I wouldn't be surprised. I'm not making a prediction, but I wouldn't be surprised to see something like this occur next week, where it gets trapped below that 5-day moving average. Then maybe we come down and test this anchored volume weighted average price that is correcting higher as it moves higher. That is, if it comes down to that, and maybe that level is tested, or perhaps it even breaks down further from there. My crystal ball is in the shop. I don't know what's next. I focus on risk management. Right now, in the shorter term time frame, we have this pattern here. We have these higher highs and higher lows. Well, is this a lower high? And now if we break this low, if it does something like this, well, that will make a lower low. The trick is not to short even as it breaks down through that level, but instead to say, put an anchored volume weighted average price off of this low right here and say, where do the sellers regain control? Well, on Monday, that anchored VWAP might look like this. And then Monday's anchored VWAP will look something like this. So maybe to short it instead right in here, with a stop above whatever this peak is, that might be a good way to trade a potential uh, pullback in here. So it can go either way. That's never a question. I mean, that's a certainty. It can always go either way, but we have to point to it and say, what are the best odds? The best odds, I think, are either we continue to correct sideways through time in this area, or we pull back. I think it's greater likelihood. It doesn't mean that I won't trade the long side if it moves higher, but I think it's greater likelihood that we slow down and digest in this area. Part of the reason for that is the semiconductors have gotten ahead of themselves, and they're maybe starting to slow down and pull back a little bit. They're not broken by any means, but maybe if they pull back down to the volume weighted average price from this month's low, that would put a little bit more pressure on the rest of the market, the NASDAQ that is. Maybe it does something like this and breaks down towards that level. We've had a big run. This market got extended, and for the people who bought the breakout, they're basically at break even in here. But here's another one. It ran from 232 up to 255 to break out. That's a big move. You don't want to be buying after those breakouts. You want to let other people chase them and feed some out to them. So, the semiconductors still have a rising 5-day moving average. I consider them innocent till proven guilty, but there's degrees of innocence. It's not just black and white, innocent or guilty. The degree is, where has it come from? Now it's in a likely position where it might need to digest these gains a little bit. The Russell 2000 has been the worst group. Now this market yesterday made a new low for the year, and it did today, but it came back up through there and printed, and this is what we often see, is we see an undercut of a prior low. We take stops, we get new shorts involved, those people panic, and then, if it can hold above, I'd really love to see it hold above 170. If it can hold above 170, I think you're going to see something like this develop in the Russell 2000, and maybe you start to see a more significant bounce develop. But right now it's still broken. It's guilty until proven innocent. I would say just stay away from the Russell 2000 unless you're a super aggressive trader on the shortest of time frames. The biotechs continue to be garbage, as we've mentioned all year. They originally were looking to be the strongest group and perhaps what would lead this market higher, as they broke higher over here, but then they failed. And all the people who were talking about, hey, this is in my long-term account over here, they went kind of quiet, didn't they? The point is, you have to manage risk. Just because it's an uptrend over here with these beautiful pattern of higher highs and higher lows, once that pattern breaks, there's no reason to be involved in the market if you're a trend trader. The definition of trend should be how you manage your risk. Once that pattern of higher lows was broken, it's time to move to the sidelines. And then, if you're more aggressive and you have this pattern of lower highs and lower lows, that's time to be short. But it's not short at the new lows. It's short as it's starting to break down in these levels right in here, and then managing your position with a stop above the most recent relevant higher lower high, which would be, these circles. So this market continues to be guilty until proven innocent. Maybe it bounces, but there's better odds trading trending stocks that are trending higher on the long side rather than trying to attempt the bounces in here. There have been bounces in here where you could make money. There's no doubt about that in these biotechs, during this downtrend. But as long as we're in a downtrend, the sum of the declines is always going to be greater than the sum of the rallies, which means there's more opportunity. There's more money to be made on the short side in a downtrend. It doesn't mean you can't make money on these bounces, but again, what's most likely? And then, stand aside as it begins to, if you're looking at it with a short bias, stand aside as it starts to rally and then look to short once it rolls over again if your thesis is still intact. The financial stocks, I've been saying it for a while, these guys gave us clear exit before they really rolled over on the news. There was no reason to be involved in these. And, as they broke below and made that lower low below the declining 5-day moving average, no one expected this to happen. No one expected Silicon Valley and the other banks to implode the way they did. But the bottom line is there's no value in things that are still going down. It's lower highs and lower lows on all these time frames. If it can get back above this level and maybe hold above here, perhaps there's a bounce candidate trade in there next week. But again, do you want to buy the broken down garbage or do you want to buy things that are actually leading? And they're difficult to find in this market. The energy names, they're done. As long as they're below 83, I think you've got no business buying them unless you're a day trader. The market now has a declining red 20, blue 50, and even that black 200-day moving average is declining. And guess what we're going to hear about in about probably 3 or 4 weeks? We're going to see a death cross. And guess what? The market will probably be down here and ready to bounce, just like our golden cross that we saw in the S&P 500. Don't forget the golden cross and all the talk about that came exactly here on this day, and that's been downhill ever since. So, the market remains a tricky mess. It's really continuing to test people's patience. A lot of people were excited about the prospects of this market early on with this big rally, but we've given up more than 2/3 of that, meaning that it's no longer just a retracement. It's a failure of that move. And maybe it's trying to rebuild, but you've got to take each stock based on its own merits. That's what I do every single day for subscribers to Alphatrends. We talk about these setups on multiple time frames. We talk about position sizing and the fact that we've had to have much smaller position size due to the market volatility. And it's not the market that I want to be trading, it's the market we have. So if we're going to trade, we've got to listen objectively to the market. And that's it. Thanks for tuning in. Give it a like, subscribe, all that stuff. Have a good weekend.